Hello, everyone. Good morning. Good morning and welcome to our morning market review. My name is Emmanuel. Thanks for joining us for today. Uh, my apologies there for starting a little bit late. We're having some issues here, but that's restored. So we're starting right now. Good morning once again. Good morning from everywhere you're joining us in Nigeria, outside Nigeria. Morning market review, MMR. We do this every trading day, Monday to Friday, one solid hour of market analysis where we look at tips and tricks, so guys, how you can navigate the market profitably. The market is moving up and down, sideways, ranging, direction. Guys, there is a way you can navigate the market profitably. So that's what we do here. So what we do, we analyze currency, we move over to commodities, also move over to indices and all of that. So we normally like to start from the news, right? So let's look at what the news is telling us. So there are several websites you can use. Several websites you can use. You can use Forex Factory, you can use investing.com, tradingeconomics.com, my FX book. So all of these websites you can use to check what the fundamentals are saying. So macroeconomic indicators of different economies telling you what the economic direction is, okay? So that's why we're looking at the fundamental website. So you just go straight to your browser right now. So I'll do it from here, share my screen with you so that we can all have one screen. So you go straight to your browser, you type www.forexfactory.com. So guys, www.forexfactory.com. We didn't do sound check, but I guess you guys can hear me, right? Okay, so let's quickly do that, maybe less than 1 second. Just get to the chat room, type I can hear you, guys. Get to the chat room, type I can hear you. That will be fine, guys. Do it for me. Traders, are you there? Okay, Gabriel, thank you there. Gabriel, thank you there. So you can hear me. Okay, that's cool. That's cool. Gabriel, I really do appreciate, okay? So excuse me there. So so let me quickly share my screen with you guys. So I've been able to share my screen. You can see my screen under the same token. You can see my screen. So this is forexfactory.com. So for today, the Thursday, the 7th day of April, guys. April is already at the mid-month, okay? So if you look carefully, this is the simplest of all the websites we normally use to look at what the market is telling us, right, in terms of fundamental. So actually our focus is on, or our gaze is on the impact. The impact is the volatility, guys. Volatility is simply the rate of change of price with time. So what to measure, so how fast the price is moving. So, okay, so you can call it impact or you can call it volatility. And traders, we don't joke with that word, volatility. That's where the money is. The money is always on the table of volatility, okay? So we dine and wine on that table. I'm trying to say whenever there is volatility, we can make real money. So guys, that's what I mean by impact, right? So impact is simply the volatility of the market. So the red ones are the high volatility, guys. So mostly our attention is usually drawn to the red, okay? So for today now, for AUD, we have 2:30 a.m. That one is already passed. That's employment change, okay? Then, of course, the one we are looking at for is by 1:15, we have the monetary policy statement, right, from the Eurozone and the main refinancing rates, okay? So their rate statement will be out by what time in Euro there? 1:15. So guys, by 1:15, get set. We'll be having that rate statement from the Eurozone. And also it will follow up almost at the same time actually by their policy statement. Okay. So it simply means to affect the European Euro, okay, by 1:15. So whenever you see high impact news like this, don't get scared. Don't get scared. It's even an opportunity to make real money, or it's even an opportunity for that your slow trade to move very fast in your direction. It's even an opportunity for your negative trade to reduce. But it's even an opportunity for your trade to close very fast, okay? To close very fast. So usually we always like when we place a trade, So we always like when we place a trade, we want the market to move in our direction, even very fast. Okay, so that's their policy rate. I mean, their rate statement, their interest rate statement. Okay, the rate and of course the speech to follow through. Okay, or the policy statement to follow through. Of course, you know policy statements are usually uh, uh, um, non-data news, okay? Non-data news. I mean, by non-data, I mean, the whole of this area is the data part of the news, the actual, the forecast, the preview. By non-data, I mean, you do not have any data attached to it. So it's just a speech, okay? By 1:30, 15 minutes afterwards, we have the unemployment claims. That's weekly unemployment data from the US, okay? Measuring those that are filing for unemployment benefits and all that. That gives us an insight week by week of what the employment data is doing or the employment data is in the US, okay? Then, of course, by 1:45 p.m., wow, another 15 minutes after, we have the ECB conference, okay? The ECB, European Central Bank press conference, okay? This press conference may likely be for Christine Lagarde, okay, to mount the podium to explain why the rate has been the way it is or why they want to increase or cut all of that stuff. So, okay, guys, I think we're on track here. Then, of course, 1:45 p.m. is the last high impact news for the day. And of course, for today, all throughout today, we'll be having bank holiday on the New Zealand dollar. We expect some low movement on that particular currency. So, guys, that will be all for fundamentals here. So it just simply means by 1:15 we'll be expecting some liquidity pump into the euro there. I mean, we'll be expecting some movement in the euro there. Then, of course, don't forget by 1:30, the normal weekly unemployment claims in the we have on the dollar. So, guys, that being said, your somebody is asking, how do you know the result of the non-data news? Okay, since there is no actual data, it's hard to know the result. Okay, except you follow up the speech, and you can follow up the speech or maybe CNN or maybe Bloomberg and all of that stuff to follow up the speech to yeah. And even if you follow up the speech, most times without having background in economics, you cannot really decipher what the direction would be. Okay, but we just expect volatility on that particular instrument. Now, guess what? That's 1:50 p.m. right? 1:50 p.m. the rate statement, right? And followed by this policy statement. But guess what? After that, by 1:45, we're having the press conference. So between 1:15 and 1:45 p.m., just be expecting some kind of movement, okay? So for non-data news, data news are very easy to trade because you see the actual data than forecast. For non-data news, just expect the market to move, okay? Depending on what the speech, the content of the speech is. So guys, let me switch over to my chart. Let's look at some trade directions, right? Very important, technical analysis, that's what we want to do right now. Very important. What makes you a trader is to have a knowledge of where the market is going. Looking at the chart makes us traders, and from what the previous price action is, we can tell the future market direction. That's just what we call technical analysis. Previous price action is actually the left-hand side of the chart. So guys, in technical analysis, we try to look at the left-hand side, the left-hand side. So the left-hand side tells us what the market is trying to do. So I'll share my screen right now quickly. We just move over to technical analysis. So guys, if you're ready, I am ready. If you're ready, I am ready. Okay, guys, quick one right here. So quickly, this is my chart right here. As you can see, I've been able to share my screen. We have full screen here on the chart. I like to always look at it on the full screen, guys. So let's start from the US index, okay? So the US index, as we have it, is trading around 99 there, right? As you can see. So the dollar has been falling for some time right now. And of course, we had some level of consolidation here, which could also mean accumulation here. Now it's accumulating there, and of course, it has formed a range for us there. So that means we can tell that the dollar is down for now, looking at the charts. Remember, technical analysis or in trading generally, you want to trade what you see on the charts, right? You can anticipate, very fine and good. Sometimes the news can be misleading, guys, but then when you trade what you see on the chart, you're making the right or the best decision, guys. So right now the dollar index is on a range. So one of the things you want to do is to identify what the market is currently doing. So right now the market is ranging. So this is the lower band. So it has bounced off the lower band. We'll be expecting it to trade up to the higher band of it. So one of the things you want to do is to identify the range of the market very early. Okay, so if you identify a range very early, so you stand a chance of making it good, you stand a chance of reaping the benefits of whatever is happening on the market. Okay, so guys, so this is a range right now, but generally speaking, let's go to H4 time frame so you can see how much the market has been on the downward trend. So don't no doubt this is purely a downward trend, right? Because we keep breaking structures, guys. Don't forget this analysis is market structure analysis. So we have broken structures to the downside. I mean, liquidity have moved to the downside, so the market is trading downward. Hello, guys. Are you all still here? So that is okay. I can see you there. Wisdom by name. You said kindly analyze GBP, JPY, and of course GPS. I think you have some affinity for GBP. Yeah. Oh my goodness. Is there affinity for GBP or affinity for money? Mr. Wisdom, even for your name, Wisdom. What I said, I think it should be affinity for money. The market can the name of the instrument can be anything. Just make money. If you look at the economy right now, you discover that you just have to make money. You cannot leave your house and maybe go visiting or just go out without spending money. In fact, once you step out of your gate, is already debit. How do you say it? Once you step out of your gate right now, the next person that they will ask you is service or current. That's it, service or current. So guys, you just have to make money. So wisdom, I want to believe the affinity is for money, okay, not for GDP, okay. So, but then I'm going to analyze those two, okay, especially for you guys. Okay, guys. Okay, the affinity is for money, sir. Okay, I like that. Oh my goodness, savings are correct. Oh my goodness. So guys, let's leave GBP. Sorry, let's leave the USD index for now. Okay, we have ascertained that the instrument is trading downward. Right, the strength of the dollar is downward. We have also ascertained that right now it is on a range. As you can see, I do this thing on the H1 time frame, and it is still showing me very well the way it is supposed to be on the H4 time frame. So that means we are right. Okay, so when you do on one time frame, you switch to another time frame, is still perfectly marked at those very important areas, which shows that it's all good. It's all good. Okay. So let's do Euro USD first, just like our custom is. You know the custom, guys. So Euro USD right now, so this instrument is actually pumping, guys. It's pumping to the upside. This H4 time frame, guys. So H4 time frame, the instrument is actually so H4 time frame. What have we seen on H4 time frame? We are seeing a high, another high, and a third high. A high, another high, and a third high. So the first high, the second high, and a third high. So the instrument is actually pumping and running to the upside. As you can see right here, this instrument is running to the upside. But guess what, guys? Guess what? Now this will relatively equal high. So triple top there. So on the H1 time frame now, you know what we always say about triple tops, right? So if the market has given you triple tops, right? First top, second top, third top. So there is a very strong signal that the market may likely move up to clear those highs, okay, because there are actually liquidity traps there. So if you look carefully again, so one of the ability of the or the capacity of a trader should be to identify a ranging market, because the market can turn into a range. So guys, so actually what I'm seeing, I'm already seeing a range, okay? So whatever can be your analysis, but it's always important for you to identify what the market is currently doing. So that's what we call market structure, okay? So the structures are built by the highs and lows. So if the highs and lows, if the highs keep getting relatively equal to the previous highs, and the lows are actually relatively equal to the previous lows, that's what we call a range. So let me say it again. If the highs are actually relatively equal to the previous highs, and the lows are actually relatively equal to the previous lows, that's what we call a range. So this market is actually ranging, as you can see. So if it's on a range, and it have tested this particular high, of course, normally speaking, by rule of thumb, actually, that's actually a rule of thumb, okay? So by rule of thumb, we're expecting it to move down to test this low, okay? So we're expecting it to move down to test this low. So whenever you identify a range like this, the next job to do is to just draw it. The next job you do is to just extend it to the right-hand side, okay? Remember, when we analyze the left-hand side, taking action is on the right-hand side, okay? So you draw it to the right-hand side of the chart. So guys, this is what we expect. So we're expecting it to do something like this, right? Then, of course, from this level, we're expecting it to move up again, but then it doesn't continue for long, okay? So, of course, it has happened. This is one. Okay, let me show you real quick. So, this is one, and of course, this is two, right? You can see this is two, and of course, this is three. As you can see, this is three. Of course, you can see this is four. So, this is one thing I will expect you to do every day when you trade, okay? Just identify what the market is doing at the left-hand side, maybe 2 to 3 days uh, of history to the left-hand side, right? So that will give you an insight of what it's actually doing, okay? But if you look at this carefully, you will notice that 1, 2, 3 is already enough to identify that we are on a range, right? So you don't even need as much as 4, 5, 6. So 1, 1, 2, 3, 4 touch is already is already good to conclude we're on the range. Okay, so a sell is supposed to take place here, right? So, but it has already moved a little bit lower. But if we move up to this area again, the sales can come in. Okay, so guys, sales can come in around this range, right? Because we are on a range, so sales can come in around this area. So you can see the price area around 1.14, right? So around 1.14, early 1.14 to 1.139. So sales can come in around this range, actually a range. Why? Because that is the upper bound of my range I've drawn. Okay. So guys, that's what we can do right now on Euro USD. Okay. So we can wait for the market to get to this area again before we can sell, or we can wait until it bounce off this level before we can buy. So we are trading inside the range. We are trading inside the range. Don't forget the higher time frame is still on an upward trend, guys. So this is still upward trend. So don't forget that it means if you are a swing trader, you wish to leave your trade to run for days, or your trade is already running on profit and you're buying, then of course your trade should still be open, okay? Because the bias right here. So this is the last known strong high, okay? Last known strong high. And of course, the market has breached or the market has violated that high. Violating the previous high like this on the H4 time frame is a sign of upward momentum. So the market has violated this high to form a new high. So this is actually a higher high. Higher highs are actually signs of the market pushing upward, of course, signs of a higher momentum. So it means the big boys, I mean the hedge fund, the leverage fund, right now they are capitalizing on a buy on the euro. Okay, they are dumping the dollar right now. It's showing very careful. Is showing on the chart. It's showing on the chart. Remember, I told you you have to trade what you see on the chart. In fact, just make it like a frame in one part of your bedroom or even your sitting room. Just like trade what you see on the chart. Mm. That's how to make trading a lifetime adventure. Trade what you see on the chart. So let's leave Euro USD. Let's jump onto JPUSD. Mr. Wisdom, this is JPUSD right here. So let's look at what it's doing for us. So you want us to analyze JPUSD. And we're honoring that right now. So we're analyzing GPUSD. So see now, see the way we're analyzing. So that you get value, you get real value. Okay. So if you look carefully, you notice this is the last known high. This is the last known high, and the market have violated that high to form a new high. Okay. So the market have violated that high to form a new high. That suggests that the momentum we are the momentum is currently going upward. That's what it suggests. The momentum is currently upward momentum, because the strength it took for the market to let me use the word resurrect from this low or from this grave. Remember, Friday will be Easter Friday, right? So let's use that word resurrect. Easter Friday, Easter Monday, take note, guys. Trading will still be on, okay? So it means you can still trade Easter Friday, Easter Monday. But it's very important that you note that you are to trade from home, okay? So the office locations will be closed, but you can trade is still on, right? The market is still open. That's what I mean. So you can trade. In fact, that's the best time to trade because you are well relaxed, and of course, you are trading under the resurrection anointing. Oh my goodness. So the market came from this low, if like resurrect. Let's use that word, okay? This is Easter mood, guys. So the market resurrected from this low. So it took a lot of momentum and a lot of power for that resurrection to be possible. So the market resurrected from this low, right? And was able to trade above this high to form a new high. So guys, let me know if you're understanding me. I hope you know what I mean by resurrect. I mean it's okay. You cannot see my screen. Who is the person that cannot see my screen? Okay, Olufowoka. Okay, let me leave that one. Bamis, is it Bamise or Bamis? Sorry, please, if I'm other than name. You cannot see my screen. Sorry, please. The rest of us, can you see my screen? Or you heard me when I say resurrect? Let me know. Did you hear me? You can see my screen. Someone cannot see my screen. So let me just be sure that you can see my screen. Okay, yes, wisdom, you can see my screen. Okay, let me run fast. So the markets actually resurrected from this low and was able to trade above the highs. Okay, enough power was needed for that. So it is that power that will call momentum. So there is still enough momentum right here. Thank you, sir. Thank you, Kayode. There is still enough momentum to the upside. And guess what? It did not give us relatively equal highs, rather, it was able to violate this high to form a new high. So that shows upward momentum. So now that we are seeing upward momentum, Mr. Wisdom, the next thing we do is to look out for opportunities to buy. Okay. Opportunities to buy, opportunities to buy. So that suggests a higher high. So the market is giving us higher highs. So let's now drop a little bit to a much lower time frame. Okay. Now, it simply means this line is resistance non support, as you can see. The popular trading 101, okay? Resistance non support. So this is resistance non support. So we're expecting the market to bounce off this area and, of course, push to the upside, okay? So you expect the market to bounce off this area. On the H1 time frame, the market is already giving us what we call bullish engulfing. Okay, so the market has already engulfed all of this candle. So that's already a bullish sign. Okay, so the buyers can come in right now, or if you want to enter, if you want to do sniper entering, you wait for the market to come back to this level. But guys, this is a double touch right here. So the buyers can come in. So we are already seeing some confirmation of buys right here. Remember, I told you we are trading what we see on the chart. So we're already seeing some confirmation of buys. What do I mean, Emmanuel? What do you mean? I mean, we have already seen from the resurrection I analyzed, or if you like, from the momentum that the market took over, was running from that low, was able to trade above this high. That's already enough sign of bullish momentum. Then also, we're already seeing a bullish bar right here, right? Very big, bigger than the bearish bar. Okay, so if you do candlestick maths, if you know what I mean, candlestick mathematics. So let me even write it down. So if most of you are hearing it for the first time, So if you do candlestick math, so candlestick math, candlestick math. So if you do candlestick math, you can fair. How do I increase it up? Okay. So by candlestick math, you can fair that this is actually so if you're hearing this for the first time, write it down. Okay, wisdom demands that you write it down. No, wisdom is not you I'm calling. I'm just saying generally wisdom demands that you write it down. Okay, so by candlestick math, you can tell that this is already good for sales to come in. Okay, so one can place a sale right now. Okay, so if you choose to enter, this is the best time to enter. No, sorry, this is second to best time, not the best time. Because the best time is actually at this particular level. So at this particular level by arrow here, this area is the best time. Okay. By this particular time, we have already seen the candlestick math playing. So by candlestick math, I mean if you add or by addition, if you add this candle plus this candle plus this candle, somebody is screaming, Emmanuel, is it possible? You're thinking about it? Yes, it's possible. If you do this candle plus this candle plus this candle, okay, this is 1 hour time frame. So this bearish candlestick plus this bearish candlestick equals to a bearish candlestick, right? Even plus this bullish candlestick equals to a bearish candlestick. This one single bar was able to engulf, or this one mother candlestick was able to engulf this baby's candlestick. So that's what we call bullish engulfing. So by your knowledge of candlestick mathematics, you can be able to tell when we have a bullish engulfing or a bearish engulfing. In this case, it's a bullish engulfing. So this is the actual area where your buy is supposed to come in. Okay, so the buy is supposed to start from this particular area. Please, are we following? Okay, let me run fast. So by this analysis, Mr. Wisdom, this analysis is actually a buy signal. Okay, it's a buy signal. Buyers can come in. So if you already have buy trade running, okay, leave your buy trade running. Okay. If you have sell trade, guys, make sure you have stop loss on your trade. So we are done with your GP USD. I hope you got some value, some real value. Okay. For me, it's okay. And I hope you understand the candlestick mark there. Now, let's switch over to Mr. Wisdom. You said we should do which one again? GBJPY, right? But I hope you got value from this one, okay? So it looks like I'm only serving you this morning. Maybe your name is Wisdom. Okay, so GBP, JPY, real quick, guys. GBP, JPY, are we there? So the number is actually increasing, guys. Thank you for joining us. Call your family and friends to join this, okay? Okay, Mr. Wisdom said, I got real value. Thank you very much. I really do appreciate that wisdom, that particular comment there. So let's do again GBP, JPY there. So GBP, JPY, look at the beautiful chart I have here. Just like the custom is, I'll go to H4 time frame, guys. So I hope it's not only wisdom that got value from that. If not, it's not be good though. It's not be good, guys. So the rest of us, get to the chat room. Let me know if you got value from that GBP, USD analysis. Let me know. Yes or no, you're free to tell me you didn't get value. So guys, GBP, JPY on the H4 time frame, what can we see here? Very clear. What can we see? Let's analyze what we see on the chart. Just like I told you. Okay, so go to those guys that can just turn text into a frame. Tell them to write for you. Trade what you see on the chart and just hang it one side of your sitting room. That's how to make trading an adventure. I'm saying it for the second time that what you see every day becomes what we call silent seminar. And silent seminar talks to you even when nobody's talking to you. And that is what that goes deep down into the soul. So guys, trade what to see on the chart. So what are we seeing on the chart? We are seeing on the H4 time frame, we saw a very big downpour, right? A big push to the downside. Of course, that's what I mean by momentum. So we saw a very big push to the downside. This instrument rushing and moving to the downside, breaking all known structures to the downside, and taking out all the lows. That's what suggest momentum to the downside, okay? Then suddenly we saw this retracement to the upside, okay? So for what I'm seeing on the chart right now, I'm seeing this particular level as a strong area where the market needs to overcome. Okay, so this is an area where the market needs to overcome, guys. So if the market overcome this area, it means GBP is now trying to move upward. So it means we are having a market structure shift. So the market structural shift will happen if GP is able to trade above this high. But without that, this is still a downward trend, guys. This is still a downward trend. But stylishly, we are already seeing higher lows, as you can see, right? So the market is a combination right now of lower lows and higher lows. Okay. Those two are actually against themselves. Okay, lower lows is supposed to go with lower highs. Okay. So this is a low, a higher low, a higher low. But guess what? From this push to the downside, this is actually a retracement. If you notice, this big push move, this big movement upward did not trade above this high. So it came down again, tried to move up again, respected this high. So that means this is an area where the market is showing a whole lot of respect, this particular area. Okay. So, but guess what? If I zoom more into the area, you see that right now GBP gave us what we call a bullish engulfing. So, guys, a bullish engulfing on the H4 time frame is a very important signal. So, I will drop down to a lower time frame. Let's see if the day traders can have something for them on the table. Okay, let's see whether the day traders can see some areas where they can trade. Okay, because this is H4 time frame. So, for day traders, remember, we have cited a bullish engulfing, which signify a very strong momentum pushing to the upside. So, guys, give me one, just give me less than 30 minutes. I'll be back, please. So, guys, we are back right now. Let's continue. 30 minutes, 30 seconds, right? So, from this particular level, we saw a bullish engulfing right here. So, this is a bullish engulfing. So, this bullish engulfing simply means we're having some strong momentum that wants to push to the upside. So, let's switch to a lower time frame so that we can maybe see some signs of a bias for the day trader. Okay, so H1 time frame right here. So remember, we saw bullish engulfing. That suggests that there is a very strong momentum to the upside. Okay. And if you watch very carefully, you will notice we are on this H1 time frame, we are already seeing what we call a change of character on this H1 time frame. It means the market has traded, has formed a high, right? And have traded above that high to form a new high. So the market has formed a high and have traded above that high to form a new high. What does it mean, sir? So it means we are already seeing signs that the market is wants to go up. So if you have a buy trade already, you may want to leave that buy trade because you are already on the right track. Now, if you don't have any buy trade, you want to enter a buy trade right now. But guess what? If you take a trade right now, your stop loss will be here. This particular trade is a 1:1 trade. Your stop loss will be here. Your target has to be this area, sir. And so that makes it a 1:1. So, Mr. Wisdom, are you there? So your target has to be this area, this particular area, this particular area. Because inside this particular area, we'll be expecting the market to go through a lot. I mean, the market should go through a lot of resistance. So, but if it finally breaks here, guys, then voila, we are going upward. So, Mr. Wisdom, did you get that analysis? So, this is GBJPY, okay? Angel, you're asking which instrument we analyze, GBJPY. So, I think we have done justice to those two instruments you mentioned. So, the rest of us, what instrument do you want us to analyze? Someone said, okay, of course, we have to naturally go to gold now. Gold is the first instrument we have to look at right here. So gold has gotten to 3,000. Now gold is going far, far beyond 3,000. It could just touch 3,300. I think that should be the all-time high, right? The all-time high. Personally, for me, trading is, I've never seen gold around 3,300. In fact, 3,356. So most of us there trading, this is the first time we are seeing gold. Is it even most of us? Everybody here on this platform, this is the first time you are seeing gold. Uh, man, goodness. Everybody here, I think, if I'm not wrong, this is the first time we're all seeing gold trading at 3,000 in history, right? In history. Like most of us trading, maybe trading for maybe 2 years, 3 years, 5 years, even 10 years. Last 10 years, good, I'm not talking. In fact, for history, I hope I'm not wrong. Uh, a gold I've never ever touched 3,300. So, guys, this instrument that suggests that the momentum is really hot. It's really hot. So, guys, if you're getting value, nothing stop you from calling your friend. Share the link with your friend. Let them also trade just like the way you're trading. Okay. So so what do we do on gold? It simply means look for opportunities to buy. That's it. That's simple. It has always been opportunities to buy. It has not stopped being opportunities to buy. And since gold touched 3,000, despite all of this downward movement we saw here, opportunities to buy. So what do I mean by opportunities to buy? In fact, that would be, I think opportunities to buy or sell can be an advanced topic, right? One of our advanced strategy, topic of one of our advanced. So once you get opportunities to buy, it means your directional bias has already been established. Now in trading, the first thing you want to get is our directional bias. By the time you get a directional bias, the next thing is now opportunities to either buy or sell. So once you get opportunities to buy, opportunities to trade, opportunities, it means the opportunity is already established. And the opportunity is defined by the directional bias, guys. So trading is not done haphazardly. Trading is done by knowing or by having your directional bias in place. After having your directional bias in place, the next thing is to get your opportunities. So those two things are the two things you must check. You must check them before you trade. So guys, opportunities to buy is defined by this upward trend. Okay, so this is a very powerful upward trend right here. So guys, opportunities to buy. So opportunity to buy, let me repeat it again. The question is powered by repetition. So opportunity to buy is actually defined by this upward trend right here, as you can see. So now on this upward trend, let's look at for the real opportunity. So we saw some kind of movement around this area. So so this is actually where the market got a breather before it pushes upward. So this area will be a very good area where we think the market will struggle to go below it. Okay. So remember, if you're trading gold, you don't want to trade gold with small money, 100K, right? No, guys, don't do that. Don't do that. This instrument is not for small money. Okay. And the kind of movement it can give you, it cannot be shouldered by small money. It cannot be shouldered by small money. So if the market trade is on top of this area and you have a bullish engulfing, then guys, you can look, you can place a buy trade. If it trades around this area, because I'm looking out for a support, okay, this is one support that is very close, right? Remember, this two are traded up very well. So let me draw the different areas where I think the market will most likely bounce off from. So these are areas where I'm expecting a bounce. And of course, the opening price of yesterday. Remember, the market opened yesterday and decided to run upward. So yesterday was a very strong bullish day. Day for yesterday was bullish. So bullish day for yesterday, bullish yesterday. Today, the market may just end up being bullish. But right now, it's bearish. The market is bearish right now. So being bearish, of course, the market is trying to offer some discounts, right? The market is trying to offer some discount. But for those that we are selling, they are hoping earnestly that this market goes down. So, but analyzing what you see on the chart, it simply means the market is trying to offer discounts, right? I mean, the market is trying to get the attention of more buyers by offering lower prices, because at this very high price, the market is already what we call overbought. Okay, so the market is trying to offer lower price. So these are several areas where I think the market offering lower prices may attract the attention of who now? Of buyers. So these are areas where one will most likely want to do a buy. Okay, this time frame is M30, right? M30, you're asking the time frame. So you want us to look at NZDJPY. Now NZD is having bank holiday today. Mr. Is it Kumi? Kumi say we should look at NZDJPY. I like what I'm saying on Euro JPY. So NZDJPY, let's not deviate NZDJPY. So you analyzing NZDJPY, you want us to look at it very simple. So indices, right? So NZDJPY, to honor your request there, very simple. Let me rush through it because remember, New Zealand is having a bank holiday for today. So since they're having bank holiday for today, it simply means we may not be expecting much movement. But as you can see, this upward movement is actually from that particular instrument, right? That particular asset. So I'll be expecting it to turn around this area. So it's just a range, right? Just a range. So trade the range. Mm, trade the range. Mr. Kumin, trade the range, trade the range, trade the range. So trade the range simply means that you wait until the price gets to this upper range, then don't buy, then only look for opportunity to sell. Sell, I mean, you wait until the market forms the first bearish candlestick before you start selling. Okay, so trade the range. So that means you wait right now until the market gets to this high, because it's a range. So the market is giving us a range. So DE US 100. Let's do US 100. So US 100, you want us to look at indices. So guys, US 100, this is US 100. So we got a gap here and the market was able to fill that gap. So we got a gap here and the market was able to fill that gap. Okay, so of losses on this instrument you that gap. How much of that gap if it is downward? So guys, I think we are back right now. Little network. So he created a low. Let me share again. Trade below that low, okay? Right? And now it did a retracement the upside. That's characteristics of it, momentum there. Okay. Go to minister. We have these are not just assets. This so after so after okay, that is exactly what I'll be looking out for buy this in after. So I'm looking out for opportunities to buy. So opportunity to buy are actually on this support area. The opportunities to buy are actually on this support area. So this is one area of support opportunity buy. So that means if the price gets there, sir, you want to place a buy trade. So this is another area. So most of you can just screenshot these areas as areas where you want to buy. So these are areas where you want to buy because this fall is actually the market trying to offer you a huge discount, right? A huge discount. Just like what happened to Tesla. They were burning Tesla cars everywhere, so it affected Tesla stocks. And of course, Tesla stock is also part of this US 100, right? So if you're having some downward movement like this, it's actually an opportunity to buy Tesla at a cheaper price. So the market can offer opportunities to buy. So these are opportunities. So one way you create stock is to wait until the market offers you discounts, right? So, and there cannot be discount except there is a very big fall of that asset. Okay. So if you look at the 10 years chart, 5 years chart, 2 years chart of this of US 100, you discover that it is only upward direction. So whenever you see any movement downward, it is an opportunity indeed. Mhm. So remember, don't forget to add your stop loss to your trade. So it means if the price gets here because it's a support, you buy. Okay. Then you, of course, you use your control stop loss, and of course, your take profit can be up high as this gap area. Okay. The same thing here. So let's look at another instrument. That would be what now? Let's look at US 30. So this is US 30 here. So US 30 is almost showing us the same thing. So US 30 is almost showing us the same thing. So it simply means we are also looking out for opportunities to do what? A very clear downward trend here, but guess what? These are companies. So I'll look out for opportunities where the market will present a buy. So opportunity will be on this support, right? It will be on this support. Then of course another opportunity will be on this other support. So guys, I think we've come to the end of it. It's already 9:09. Thank you very much for joining us on this exciting section, Money Market Review. My name is Emmanuel. Join us again tomorrow for another exciting section. Deserve Friday, 1 solid hour of